Hello and welcome to this week's crypto update. So, what's been happening out there? Well, let's go back a couple of weeks. We did this video update 2 weeks ago, and just prior to the Jackson Hole announcements by our speech by Jerome Powell, the Fed chair. And in it, he spoke about the data. And he's been speaking about the data now for 12 months plus, or for a lot longer than that. But within it, he's been always saying there's two elements that we need to balance in order to decide whether to, change the interest rates. And those two things are the economy and the strength of their economy and the jobs, and on the other side, inflation. If inflation is going up and the jobs market is solid, they'd be inclined to increase interest rates to try and bring back inflation, and the economy could take it. On the reverse, if the economy is weak and inflation is low, then they could reduce interest rates to stimulate the economy and they wouldn't have any fear of inflation. The problem they've had for the last number of months is inflation has a huge risk of going higher and hasn't come back to their rate of 2% or anywhere near it. But at the same time, the jobs market looks like it's getting weaker. Many people believe this long before they've admitted it. But at Jackson Hole Symposium, he came out and he said, okay, it appears inflation isn't quite as bad as we thought, even though it hasn't gotten near their target. And they're saying, the tariffs that we thought might increase and create more inflation hasn't come true. So we can sort of not worry about that too much, though I'm not sure how they can say that because most of the tariffs haven't come into effect or many of the deals haven't even been done yet. But also, the jobs market is actually showing signs of weakness. And for the first time, they've admitted that. Now, what does this mean? Well, then what people took that to mean is that it's pretty much a guarantee that there will be interest rate reduction of 25 basis points in September. And in fact, right now, that's at 95% certainty in the prediction markets. So is the September rate cut baked in? It would appear so. And to underline that, in information that came out just yesterday and today, the Fed cannot ignore this labour market chart. Unemployed Americans now outnumber available jobs for the first time since 2021. The Federal Reserve has all the evidence it needs for a September rate cut, so making it even more likely that this rate cut is going to come into pass. And that chart is here. So what this chart basically means is there are now more job openings than there are employees to fill it. And so that shows a weakness in the overall market. And so in the years following the pandemic, employees had the upper hand against employers. Why? Companies had to work hard to retain talent because there was far more jobs available than people to fill them, which fueled wage growth and gave individuals unusual leverage in the job market. However, the shift also raised questions as to how much slack the economy can absorb before growth falters and recession fears return, because now there are less jobs available than people looking for them. And so that now puts the employers in pole position where they can find employees that will work for less because those people can't find work, and that can have a deflationary situation. But the Fed now have every reason to point to jobs data as a reason for a data-driven cut. They've always said they wouldn't reduce it unless the data showed it. Now the data is really clearly showing it. So the labour market has flipped. Policymakers are running out of reasons to maintain patience. Ultimately, what all this is saying is interest rate reduction looks to be absolutely baked in the cake, but the markets have already priced it in. So if there is a 25 basis rate cut, which is what is expected by 95% now at this stage, that would likely mean we'll see very little movement in the market. Probably a little bit of positivity, but not a huge amount. And this is all to happen in a couple of weeks' time. What if, for example, there's a few scenarios. If that happens, I don't see the market moving massively. Probably a little bit positive, but not hugely. If, for example, they don't do a rate cut, and the fact that it is priced in, I think we'd see the market have a very negative reaction to that. And of course, the other possibility is they do more than a 25 basis. They could do a 50 basis rate cut, which I would say the market would absolutely take off on the back of that. So ultimately, it appears to me that the overall market is poised for significant growth towards the end of the year. And I think a lot of things are building towards that. But we could certainly see a lot of volatility in the meantime, in the next few weeks. Overall, what does this mean and for positioning and all the rest of it and altcoin season? Well, we've seen Bitcoin has been as high as 124,000. It had a dominance of 62% of the market. That's Bitcoin itself has come back to 109,000 now. Ethereum, of course, in the last number of months have absolutely taken off, going from around $1,500 all the way up to nearly $5,000, so over a 3x, and has outperformed Bitcoin. This has meant that, and other altcoins having grown a little bit, but mainly down to Ethereum, the dominance level now has fallen from 62 down to 55% on Bitcoin. This usually is a strong indicator of altcoin season. That and Ethereum itself moving. So we've seen Bitcoin pulling back, we've seen Ethereum taking off, we've seen that rotation into Ethereum, which usually is the process that happens as we move into altcoin season, and that tends to move then from, you know, the top 20 cryptos down to the top 50, top 100, and then way out into the further out the risk curve. Doesn't mean that's going to happen this time, but it also doesn't mean that it's happening right now. I certainly think there is a very strong possibility, while we could see volatility with Bitcoin over the next couple of weeks, I certainly do think we'll see another big push from Bitcoin towards the end of the year. That could increase its dominance, but I do think we'll see altcoin season following quite shortly after that. So what this means is now, I believe, is a really good time to start considering what it is you should have in your portfolio and why. But I am going to follow on with an insights video in the next few days where we look into this a little bit deeper. What if we do get the rate cuts? Will it actually mean that borrowing will reduce? We have to look at what's happening with gold and silver, what's happening in the bond market, take all that into account and figure out what's the best way to position, taking in all scenarios into account. Watch out for that in the private group. For the moment, watch this space, watch out for volatility over the weekend and over the coming weeks. But ultimately, I think we could be in for a very positive outcome towards the end of the year. Talk to you all very soon.